All right, good afternoon, everybody. This is event trader Gavin McGuire here, and we are about to kick off our December trader strategy meeting. We've got all the traders with us here. Craig is working on getting into the room with us, so hopefully he'll be here shortly. But to start off, uh, we do have scalp trader Damon Southward, of course, chart trader Brett Manning, and blue chip trader Scott Smith with us. So, what we're going to do here is we're going to try to have an open, lively discussion with all the traders. A lot of action going on in the market, some volatility that's crept into us around the Thanksgiving holiday that continues to provide some choppy activities. So, we're going to kind of break this discussion down into three parts, more or less. First is going to be everybody's thoughts on their perspective area in what's going on over the last 2 weeks, how that might have changed some of their perception around what they're usually trading. Then we're going to take a look at the next couple of weeks, what people are expecting, and then take a look ahead at 2022 and some early themes and thoughts of the traders on the desk here so everybody could get prepared for next year's trading activity. So, without further ado, let's take a look at some of the price action that's been going on over the past few weeks. And we're going to start with Brett here. Brett, you usually are looking at futures and commodities, so I'd be interested in your thoughts overall on the action that we've been seeing. And I know that there was a breadth thrush signal that you had seen over the past couple of sessions that you're pretty interested in talking about. So you want to give us some of your early thoughts here?
Yeah, sure. The signal basically is at the end of November, we saw selling pressure pick up enough to, and the technical definition in the way that this was put forth is the 10-day average of the NYSE up volume went below 40%. A couple days later, it dropped down to 34%, which puts it in the bottom 2% of every market session since 1962 in terms of how much, what percentage of volume on the NYSE was in advancing trades versus declining trades. And then right off of that, immediately following it, we saw 3 out of 4 sessions that had more than 80% of volume that was up volume. So 8 out of every 10 shares traded, during the entire day on the NYSE was an upward move on the volume. So that puts it into an extremely narrow group of combinations since 1962. That combination has only happened 10 times, and every single time it's happened in the past, it has led to a lot more market upside over the short term, over the intermediate term, even over a year out. Now it's a small sample size because it's only 10 days, but still, it is so far an unbroken streak in terms of when this happens. Now, if I were to play a little devil's advocate, I'd kind of harken back to something that Gavin, you and I talked about during our last Sentiment Flow show when we talked about the consequences of the sort of overwhelming kids with calls factor in this market. We haven't had options volume anywhere close to where it is nowadays when you look at that last 60 years. I mean, 9 out of the 10 most active call option trading days in history have happened this year. And we've got, I think, 39 million option contracts changing hands on average every day this year. That's 30% higher than it was last year, and by far the highest all time. So it's really, there's a possibility that a signal like this could be apples to oranges in terms of historical comparison, because the dynamic you and I talked about is this puts in play something you might call the high tight margin call. So it takes relatively little stretching to the downside before you start to margin traders because you've got smaller accounts levered up massively using derivative contracts. So it takes relatively less downside movement to start a market wide margin call on retail longs. And that could give you this kind of, as an artifact of the forced selling from options, that could give you this kind of overwhelming skew in terms of up volume versus down volume, which could make this type of signal uh, less valid. So there's a counter argument to it, but still, what we have seen over the last 6 days or so is technically a signal that has happened just 10 times in the past 60 years, and every single time it has led to a lot of market upside.
All right, Scott, with that in mind, some of the technical activity that we've seen in the futures over the last couple of weeks, has there been anything that's sticking out that, building upon what Brett said, could skew your thoughts on how you're reading the charts?
No, Gavin. I mean, you listen to me day in and day out on audio, and we're always discussing the different markets and what's hot and what's not. Um, from what Brett's perspective, he's taking a little bit bigger of a macro look at things. For me, from a shorter term perspective, a swing trading perspective, I'm just kind of looking at the day to day activity. And I take the information that he's providing, and then I just kind of apply it to a simplistic chart, like a 50-day moving average of sorts, and I just make sure that as long as prices are trending above those levels, as long as we're staying on par with a weekly uptrend, and the price action is continuously capturing bids, then I'm just going to keep going along with that trend and that sort of momentum. When things start to change, like they did, recently in late November going into December, it's that's when we have to just pull back in on the reins a little bit and reassess the situation, maybe hedge our swing portfolios a little bit, and then wait for the market to reset. I'm a firm believer, of the market's ebb and flow. We go through periods of trending, we go through periods of corrections, we go through periods of sideways behavior, and just recently we went through this little bit of a corrective pullback. Major indices dropped about what 5 to 8% off their year-to-date highs. The Nasdaq and the S&P, they were met with buyers after challenging their 50-day moving averages, which also lined up with their September highs. And we got some nice little bids going on here to for this week so far, and that still puts us back within about 1 to 2% of year-to-date highs. So right now I think we're just kind of sitting here with that underlying bullish tone that he was just talking about. And we just take it day by day, week by week here. But until something disruptive comes along where we see those numbers change in the put call ratio, and price action starts, severely collapsing back underneath the 50-day moving averages, and we fail to see any sort of, strength in those rallies and they continue to struggle, then I'm just going to continue to do more of the same that I do each day, and which is find those few opportunities that are out there in different sectors, leading sectors, and just capitalize on the short term price action.
All right, Damon and Craig, you guys operate in areas that tend to be a little bit more volatile. Certainly, over the last couple of weeks, we've seen some pretty aggressive price action in both the SPAC world as well as a lot of the cloud plays tech area that Craig dabbles in. Damon, what's your thought process on how SPACs have been playing out over the last couple of weeks, given some of the disruption that we've seen over since Thanksgiving, really?
It's a good question. So I've been actively trading SPACs for about a year now, maybe a little bit longer. And so one of the lessons I've learned is to give SPACs a little bit more room. And so I think 6 months ago, I would have been scaling into some of this recent pullback in SPACs. And I kind of learned my lesson on a couple pullback periods where the stock prices moved 10 to 20, even 30% beyond what I would have thought based on historical patterns in other groups. So looking at them, say, looking at the software stocks, for example, the SPACs tend to pull back quite a bit more than they do. And so one of the reasons I have not been aggressive with swing trades as of yet with the SPACs is because of that lesson learned. And however, that's a positive as well. Once you learn the lesson, because the declines end up generating more upside potential. So if you're looking at a SPAC that you liked at 10 and it pulls back to 8, so you end up buying it at 650, then it goes to 13 or 20 really fast. The upside gains are just more compelling. So that's one benefit to this type of price action in the SPACs. And I've learned the lesson to just be a little bit more patient, to scale into them in smaller size. But I feel like I've consistently identified and generally speaking, the names that have the most upside. And so I'm going to stick with that process and just, continue to factor in those lessons learned over the past year.
Okay, Craig, with your space here, I kind of view you as, and this is meant in a very complimentary way of the Kathy Woods of our group, doing a great job at just picking out some of the winners that have really had huge runs over the last 2 years. But with rates starting to edge a little bit higher, there's been some more disruption going on there. I'm curious as to your thought process on some of these high valued uh, cloud plays and some of the other tech plays, recent IPOs that have been coming out. How are you viewing this recent price action? Has it changed your trading philosophy around some of these names?
Yeah, so it definitely seems like the group kind of got ahead of itself. We've seen multiples expand over the last 5 years in the software space, and coming out of the pandemic, they really, really exploded. 5 years ago, 10 times was expensive. That became kind of 20 or 30 times. Coming out of the pandemic, started to see more 30, 40, 50 times. And this year we've seen some approach 100 times. So it kind of the multiples peaked back in February, where we saw a crescendo and they all came down, and then the speculation kind of built back up throughout the year, and they reached a new high before all tanking last week. So the consensus is that with inflation picking up and the Fed posed to raise rates next year, this isn't where you want to be. Valuations should matter more, and cyclicals and value stocks are going to be more in favor in a rising rate environment and in an inflationary environment. So, I'm trying to be a little bit more selective and pick my spots. I put out a short on Snowflake today, simply because there's a technical setup there in terms of, I think below 380 we're going to see some lower highs, and it's trading at 60 times revenue, and they even gave out a 10-year target. I think it was a 10 billion in product revenue with modestly profitable margins. I mean, it's just hard to, as much as I love the company, and you can say this for most of these, really high multiple software stocks. I mean, they have very high multiples for a reason, but as these multiples have continued to go up, it seems like they have pulled forward their returns quite a bit. So I am gonna probably be more selective and maybe play from the short side more going forward. But you never really know, because if we do see inflation peaking about now and the yield curve flattens, and we might even have more of a stagflation type scenario, if longer term rates stay low, then growth stocks could remain in favor. So the indices will likely be okay, but it's the higher multiple stocks that I tend to focus on that could stay out of favor over the intermediate term. So I'm going to try and maybe play from both sides more and be a little bit more selective.
Okay, well, we got about 3 weeks left in the trading session. Obviously, market's shown some signs of putting in a little bit of a near-term bottom from that shakeout. So I'd be curious to hear how you guys are planning on approaching the final couple of weeks of trade going on into the new year. Brett, we'll start with you. What are some of the signals that you'll be looking for in either the futures or commodities space that would get you interested in? Are there any setups that you currently like right now that you might get aggressive on over the next couple of weeks?
So the one thing that I really wanted to do during a broad market risk asset correction was to establish position long crude oil. And I did that, and I'm really just going to let that play out small and wide, and I believe that it's something that just can graduate into something that's really powerful. As far as the index trading, I mean, I think I'm just going to keep doing what I've been doing for this period. There's volatility. There's a lot of setups. I've been hitting setups pretty well, both directions. The market is moving nicely. We could get into a situation between now and the Fed where things lock up a little bit because, I think you've got some trapped shorts off of that breadth thrust pattern that we had. I think a lot of people really felt like there was some real risk of a major top coming in when we started to dive, and we snapped back so tough, so hard. I think probably there's a lot of people that tried to fade it initially, and they're pinned in there a little bit. And but at the same time, we're coming right into a Fed meeting where the Fed is going to pivot, so I think you've got a little bit of the possibility of some narrow confined action, pretty much like we're seeing today, maybe until we see exactly what we get from the Fed. And I would also say this Fed pivot is important. It's important because it's a philosophical shift. It doesn't matter. It's not so much about the change in how much bond buying they're going to be peeling off each month. That's not the important thing. The important thing is you get rid of the transitory theme, and now inflation becomes extremely direct as far as an impact. If inflation data in the next CPI report is particularly bad, it may have direct implications for the pace. We may start to see the first hike pulled in March. We may start to see 50 basis points come on the table as an initial hike. We may start to see QE's taper sped up even further. Like the shift has happened to where the Fed is acknowledging that they may potentially be behind the curve at this point, and we've also got a little bit of a philosophical shift away from who's being protected by the Fed. Is it Wall Street or Main Street? And we just maybe shifted from Wall Street to Main Street, and so asset prices aren't going to be the number one consideration. So that's really important. It means we're going to have some direct implications every time we see anything that hints at where inflation data is going to be. So that's going to be a really important shift. And I think that a lot of people are going to want to see how markets move in the 2 or 3 days following the Fed next week. So what do we see on Thursday and Friday? And I'm really curious as well. And I think we've got some tight action into that. I've been a lot more active over the last couple of weeks. I may slow it down a little bit, wait to see what we get there. But really, I'm willing to sit there and just sniper shot these trades back and forth in the indices and sit long crude oil.
Right. As we talk a lot about, you're always best to let things play out about 24 hours after the Fed.
Exactly.
And for extra level of difficulty, we have the ECB, BOE, and BOJ immediately right after the Fed, too. So I'll be curious to see. Any thoughts on CPI tomorrow morning?
No, I'm just curious.
Do you think it really even matters? I mean, I
I
don't see
do.
it being a big number. Well, I mean, do you think it's really going to? Number one, I never see one set of um, information really off, differentiating what the Fed's looking at. I'm expecting a hot number based
Sure.
around commentary from Powell, but I mean, the way I look at it is, if it comes in a little bit soft, I guess maybe people start thinking that the Fed pulls its foot off the pedal, but that I think they'll be sideswiped by Powell next week. But if it comes in extra hot, do you really think that that's going to uptick selling in terms of, okay, the Fed's lost control of this? Or do you think Powell's done enough to squash that given his comments from last week?
No, I think that what will happen, again, is there's a much more direct relationship with inflation data now. I think the Fed, that's what they're keying on, and they may speed up further. And if inflation data runs hotter than expected, it may pull that first hike to March.
Are you concerned that the PCE number is going to come out ahead of a 3-day weekend on December 23rd?
Not
Because
really. I mean,
no.
yeah, I
Okay.
understand it's the more it's the Fed's preferred measure, but anything the market participants are going to be keying off of whether or not we're near an inflection in inflation data, and if it's going to get hotter, because that's going to have a more direct relationship with what the Fed does.
All right. Scott, what are you looking at over the next couple of weeks? Are there any areas that have interested you in terms of the shakeout that we've seen that you believe are setting up for a nice swing into the end of the year?
Yeah, as with most corrective moves in the market, corrective pullbacks, you usually get a new set of leaders that emerge, with relative strength sooner than others. And I think we did see some of that here over the last couple sessions. Clearly, Apple, it really kind of dodged the entire corrective sort of action over the last 3 weeks there from November into December, moving strongly to the upside. So that's one of the top leading names that I think everyone has to be participating in. Semiconductors have been a strong group here throughout Q4. They've gone through some sort of sideways ranging action, evidenced by this the SMH here. But there's some new ones emerging, which are look really, really good. We have this Marvell Technology, MRVL, recently had earnings and broke out to a new high. It's consolidating above 90. I think it should be monitored going into year end on any pullbacks as potential buying opportunity. Qualcomm, QCOM, a really strong looking pattern there with that recent breakout in November, consolidating these gains here, moving to the upside. Broadcom, AVGO, has been climbing higher over the 500 mark over the last 2 months. I believe
Just
they're
a reminder for people
scheduled.
too, they
Yeah,
report earnings after the close today.
right. So they're scheduled to report earnings. So that's going to be a very interesting one to monitor as well. Um, so that area is really strong. But you also I see other names creeping up here like Dell Computers. This has been one that not a lot of people are talking about, but this is a really nice, good price action. It's kind of the steady grinder higher here in Q4 and pushing up there. Hewlett Packard recently has been moving to the upside. HPQ with after that earnings report and moving higher. So I would keep watching some of these computer plays. Gavin, I know you like IBM. Kind of an old school blue chip sort of play on the market there. It's been lagging, so you have to kind of take that into consideration if you do like IBM. That it still has some big overhead that it has to overcome, starting with the 50-day moving average and then all the months of resistance. But if the group is strong, sometimes a rising tide lifts all boats. So I would kind of continue to monitor that. So basically technology, housing. Gavin and I talk on Trader Audio every afternoon. I feel like we're constantly talking about home construction, home builders in general, the ITB, the XHB, just showing lots of strength here in Q4, moving up to higher ground, and it's across the board there. It could be from a Toll Brothers or the actual home builders themselves, which had this beautiful breakout the last week we've been talking about. DHI, which is DR Horton, another leader to the upside there. Or it could be something as simple as like a home furnishing or a home improvement, like a Home Depot or a Lowe's or a Sherwin-Williams, a paint store, just continuously pushing to the upside there. So we do like that area of discretion acting really strong. Utilities have been perking up a little bit. Again, we've said this before, they're not the most exciting group out there to monitor, but we did think it was pretty technically significant that it did break out of a almost a month and a half long range and getting back up to the year to date high. So maybe this is a little bit more defensive, dividend seeking amongst portfolios, kind of a defensive posturing going into year end. But it's still pretty solid there. I would even throw some REITs in there. The XLRE has been a little choppy lately, but it has been pushing up to year-to-date highs, and so this too is also kind of falls into that wheelhouse of maybe a little bit more defensive posturing into year end. But I think we have a nice mix. If you focus on some of those leading tech names and semiconductors, as well as the discretionary areas specifically related towards housing and construction, and then you kind of get this little bit of a defensive move in utilities and REITs going on there. I think you're going to be well positioned for the next 2 to 3 months into year end to kind of take advantage of potential further upside, but then also have some protection to the downside.
Damon, you always do a nice job working around some of these high flying volatile names, as well as building on your income portfolio and naturally the SPAC space too. With this shakeout here, how are you viewing the final 3 weeks? What are some of the names that are on your radar, or even perhaps maybe some of the trading setups that you're kind of looking at, more interested in an intraday trade? And is there anything on the income front that's grabbing your attention?
Okay, yeah. So I mentioned income names in my morning summary comment, and the fact that I haven't been adding anything to the portfolio of late. The deals that have been coming to market, the coupons are so low that yeah, these securities are going to get trashed when rates start to go up, and I'm just completely avoiding them. I think there will be opportunity to trade them because, say, you look at a $25 par preferred that comes to market with a 4% coupon on a spike in rates, that thing could easily get knocked down to 1750. If you get a period of distress, down to 14 or 15. So at that point, then you start to see interesting yields and up like capital appreciation opportunities as well. But whoever's buying these preferreds and these convertibles at these prices, yeah, I feel for you because there's going to be a pain trade there. I mean, it's going to be nasty. Like I'm pretty confident in that. So I'm just sitting here waiting, right? Like there are things in life, things in the markets that will happen, and it's just a matter of sitting there and waiting for them to happen, and that's one of those. Um, in terms of end of year, I'm really just focused on intraday setups, trying to find situations where shorts are coming after names that are popping and trying to catch a reversal on an initial, like so, a gap down the next day or pull back the next day. BKKT was actually that type of setup today. I closed it out just a little while ago at entry as I averaged down into the position, and it actually just popped to the highs of the day, I think. But the reason that I closed it out and kind of missed that ride was that I thought that the price action suggested that it could pull back a little bit more, maybe another 50 to 70 cents. So I was trying to basically allow people to avoid the pain of that pullback, and I was going to look for another entry. But pretty soon after I scratched out of it, the stock ripped like another buck 50. It just came off the highs. So that's what happened with that particular stock. I wanted to address it since I've been talking about that one today. And basically, I was just trying to save people another 50, 60 cent pullback and hope to get a reentry point so that we could have a better average price and then ride it back up. But I think I'll be doing a lot of that over the next 2, 3 weeks. As I noted with SPACs, you really need to give them the time to bottom out and to drift lower. And so, even though the general market, the broader market, is possibly providing signs that we've put in a bottom, I think you just have to be a little bit more patient with SPACs. And so, I want to get into January and really see how they're trading. There's tons of names out there that look interesting from a variety of different approaches, whether it be momentum, kind of my busted SPAC kind of scenario, relative value, and just new offerings that are coming in market, and also the de-SPAC closing of the deal where you get a lot of redemptions and kind of creates a short squeeze type of opportunity. That was big last quarter, and that could return as well. But one of the things I like about the SPAC space is that the SPACs are they're very focused on trying to find deals that connect with the market and momentum players. So they're always going to be bringing something interesting, hot to the market. So it's a matter of trying to understand what momentum investors will get behind, and really start to look at the price action and the moving parts and the sentiment to position into these types of names.
Okay, and I know we have a lot of new users here. Just some reminders. Damon is Scalp Trader. Scott is Blue Chip Trader. Brett is Chart Trader, and Craig is Trend Tracker. So just if you're trying to equate the names with the tickers, I'll do a better job at trying to keep on top of that. But Greg, we're bringing you in now. Some shakeout in your area here, opening up some possible buying opportunities. Do you think into the end of the year where we could see a quick return to the 2021 playbook, or do you think you're in the pivot mode like you did with Snowflake, or just simply open to either shorting or going long on these final 3 weeks in some of the higher volatility names? Greg, you still with us?
Sorry, I had to unmute there.
No problem.
Over the next 3 weeks, I'm not really sure. I mean, I guess it depends on what happens with the Fed next week. The Fed is expected to speed up the taper and basically set expectations for 2 to 3 hikes next week, right? And that it seems like that's what really crushed the high multiple, more speculative stocks. And they're getting whacked pretty good again today. You can see ARC's down over 3%. I have this list of, I don't know, maybe 20 or so growth stocks that I made called like elite growth, just some of the stronger stocks, growth stocks out there. And they're all getting hit with the exception of Olaplex, Facebook, and Google. They're all down. I would think that because the valuations and multiples really hit a new high, even compared to the February peak. If you look at like the highest multiple software stocks last week, if next week isn't super eventful, then sure, we could see a rally into year end. But I would think that what the Fed is going to announce next week could, send more shockwaves in this group. So, you know me, Gav, I'm more focused on bottoms up individual stock opportunities. I don't often have a strong opinion on what's going to happen the broader market or macro considerations. But yeah, I mean, we could be in for more chop or more pain in these high multiple stocks near term around what the Fed says next week, or even if the CPI print comes in hot tomorrow morning.
Let me ask you this: if we're chopping around going into the Fed, do you see that possibly as a buy the news type event, at least for maybe a short swing in some of these names, if we don't see further downside selling pressure ahead of the Fed? Or is it too early to tell that? And I mean, obviously, with the price action we've seen over the last 2 days, you're not alone in your kind of wait and see mode with the Fed. I'm just kind of curious as to what could be some of the price action that you see going into the Fed that could, maybe pivot you a little bit more aggressively in one direction or the other.
I don't know. I mean, maybe if we see a hotter inflation print that pressures stocks tomorrow, and we continue to sell off into the Fed, and then they announce what everybody's expecting, maybe you buy the news there. And then we could maybe rally into year end. That's possible. But, if we kind of drift higher into the Fed, then some of these high multiple stocks might be more vulnerable. But, me, Gab, I tend to have a little bit longer time horizon. I try not to get too cute with stuff. So, part of me, if it comes a stock like Upstart, UPST, I kind of am just hoping that it remains out of favor, because the lower it goes, the more I will look to scale in.
Yeah, I mean, I guess that's the premium you pay. I mean, you get fantastic returns on a lot of the plays that you pick, but sometimes you also have to deal with that 30% retracement when you're getting stocks that are this active. So and I'll ask you in a couple minutes here about 2022 and if there's any names jumping out off the screen to you in general. But let's take a look at the year ahead, and I'm curious to get all your takes here. We're obviously just about 3 weeks away from 2022, and certainly not looking for hard predictions on what you're expecting to see, or asking you to map out the complete 12-month strategy, but I am curious as to some of the things that you're looking at early on going into the year, and some of the themes that you think you could see play out. Brett, we're going to start with you. I've got one specific question for you, and then I'm just going to ask you for a broader thought process on some of the futures and commodities. But the bond performance over the last couple of weeks has been pretty interesting. Obviously, you got the headline noise around Omicron, as well as naturally the Fed playing a part. Now, there's two ways you could kind of look at the downward move in rates. One being the idea that could be some monetary policy missteps that could choke off growth, possibly cause a recession, or there's the idea that this inflationary period is indeed transitory, and we could see a return to deflation. Uh, Obviously, it'll take a while for us to see this play out. But do you have any thoughts on that battle? And I think for me, the early part of 2022 is going to be based around which one of these theories comes out to play. So, any thoughts on that?
Yeah, I mean, I hear what you're saying. I would say there's one other dimension to it, which gives me so much trouble with the bond market these days, and that's I just have very low conviction in translating the price action into a meaningful thesis about the world because of how much mechanical machination is going on in terms of the Fed's balance sheet. And there's stuff underneath the surface of that market, and there's liquidity issues that make it awfully difficult to make simplistic conclusions about, oh, rates just fell at the long end of the curve last week. Well, that must mean people are looking for a deflationary environment or whatever. Um, the, uh, you know, Really, it's difficult to attach a kind of conviction coefficient to that that's significant at all. Makes it very difficult to get aggressive in terms of positioning in something like TLT one way or the other. Um, but I understand what you're saying. It's very possible that the market is looking around the corner, and that really this is a supply chain issue. It's really going to wrap itself up midway through next year. The Fed's going to overreact now, perhaps a little political pressure has something to do with that. Um, and we end up in a situation where the Fed overreacts now and chokes off growth later, and that really kind of shows you this real flattener trade, and where it's coming from. But again, like I said, I have very little conviction in saying that what I'm seeing on the chart necessarily is that story because there's so much hidden under the surface of that market that's mechanical.
All right. So looking ahead at 2022, and obviously the macro trading that you do can be pretty broad in terms of the aspects. So I'll keep it to just a couple of questions. One, your general thoughts on the dollar, and also your general thoughts on commodities, and what are the key events that you're watching to see how these play out going into 2022. This is.
Yeah, so I think that so obviously the Fed's pivot is an enormous factor for the dollar. Generally speaking, if you have the more hawkish central bank is going to be the currency leader, and until we see something that shows that the market's able to look around that corner too, because that would be a similar corner. You can really take the conversation we just had about the long end rates and apply it to the dollar because the dollar will actually start to drop on Fed hikes if the market is looking around the corner and saying this is a policy error. This is going to lead to choking off growth. And we've seen that a lot of times in forex markets over the years. So that's possible. If the dollar remains strong, I suppose you take that as a good signal about how the market's looking at the sustainability of the Fed's pivot in the context of the growth we have ahead of us. As far as commodities, I think that there has been a consistent disincentivization to invest in new production capacity despite a lot of growth in demand. And that's one of the reasons why I'm interested in crude oil. I think it's probably the most dramatic in crude oil. But there's a structural supply issue. There is a very long-term production capacity issue, and there's short-term disincentivization to do things like complete wells. So there's a lot of different things going on that keep on, like the SPR release. It's just another one to pop in and say, hey, you were just about to invest a bunch of money into completing all these wells? Well, maybe not, because here's the SPR release. And it just keeps on reducing the future supply. And if the demand curve stays where it is, eventually that's going to come home to roost in higher prices. And there's a lot of other factors involved in that to kind of keep the price inelasticity is remarkable to me in terms of new supply. And that's defined this entire bull market. And it's really tough to see it coming to a topping situation while that kind of background context continues to be in place. There could be short-term volatility, but you still have to solve this larger issue. But there's one other point I want to make about next year. So we haven't seen a shift in Fed policy that could lead. So depending upon inflation data, could lead to even more than 4 hikes next year in terms of maybe there's a 50 basis point, maybe the inflation data gets worse. I'm not saying this is going to happen. I'm just saying it's on the table as a possible outcome here. Really we've seen, something 4 to 5 hikes. And there are a lot of people in this market right now managing a lot of money who have, graduated high school and gone to college and pledged a frat and joined a rock band and got a DUI, got into a finance program, talked to an uncle in investment banking, got an MBA, went to Wall Street, started a fund, got good at networking, raised capital. All that could have happened in the time since we last saw Fed hiking like this, right? It's been since 2004, really. And if we change to that kind of context now, there's no telling how markets are going to react to that, because there's a lot of people who are managing a massive share of the world's capital who've never seen it before. So I think it's out there as a big, very broad kind of anomaly event that we're
Do
coming
you
into.
see that being a little bit more difficult then in following the general playbook for what goes on in a tightening? Because obviously everyone's going to go be like, okay, what happened when a Volcker did this in the early
Right,
80s and stuff?
right.
And do you think that's going to be cause for a lot of trading missteps
So there's a
potentially?
lot of leverage tied up in the world continuing to be a certain way, the way that it's been for almost 2 decades. And there's a lot of money that's attached to philosophies about how much risk you can take, how much leverage you can use. That's all really tied into having super low interest rates that are super stable. And the second the short end of the curve starts ramping up, and all that math changes, because when you use leverage, it takes just a tiny move to have a massive impact and cause massive losses. But people are used to operating a certain way, and something's going to break, and I don't know what it's going to be, but something's going to break. And I mean, if we end up having a situation where the Fed is really just senses they're behind the curve, they see broad-based inflation, they see signs that long-term inflation expectations are changing, and they really need to move almost in a panic to stoke it off. If that's the type of environment we see, something's going to break. I'm just telling you. I don't know what it's going to be. It's just something. The world isn't like when Volcker came in, because we had a lot more volatility in rates for a long time ahead of that. We've had no volatility in rates for, again, like a whole generation ahead of this. So if we end up seeing a lot of volatility in the short end of the curve, then that's gonna break something.
All
Brett,
right.
Brett, you're getting me excited here, man.
I
That's the
know
world that
the
I
fun.
love.
That's where the fun begins. Exactly.
Yeah.
Yeah. So obviously something key to keep an eye out for. Scott, with you like looking at the weekly and monthly charts for longer term setups. Is there any particular themes setting up for you in 2022 that you're watching early on here?
I think it's going to be more of the same, Gavin. So, the last year and a half or so, just a real big focus on technology-driven industries, and it's across the whole gamut when it comes to stuff like this. So, I have a couple. I'm a big sector follower. I love to follow my sector relative strength and weakness, and I love the ETFs that are out there. There's like 2,000, or maybe even there might even be more than that. There might be like 6, 7,000 ETFs these days. Who knows? But I think the same themes that we've seen play out here that are very popular are going to stay in play. So, in addition to semiconductors, like I mentioned earlier, I think you could start throwing out the whole alternative energy, the lithium plays, LIT, BATT, or two ETFs that I track there. Electronic vehicles have to be thrown into that group. Obviously, I don't think that's going away, that story, that theme anytime soon here. We have even recent IPOs with Lucid and that Rivian coming out here that are really hot, along with Tesla and a couple of the Chinese names. But there's a handful of ETFs in the EV space that are really popular. Blockchain, cryptocurrency. I don't think that story is going away, ever again. I mean, this could, granted, I think it's a little bit, too far ahead of itself. But I think, it's still a story that has to remain out there. And there's a ton of groups out there that I think we can watch on that. Anything to do with automation or robotics, we watch the Robo ETF and the Bots ETF, BOTZ. I think that's a good place to be. Infrastructure, if you're looking to play more of the governmental side of things and how they're going to be passing their bills to get certain infrastructure plays out there, we do watch the PAVE. That's the PAVE ETF. I think that's a good one to be tracking out there. Esports and gaming. That's another hot thing for millennials and the younger generations. It's more about the armchair athlete. That's been out there. So I'm watching a few of those stocks out there as well. 5G, Gavin, I know you're a big fan of 5G. There's an ETF, FIVG, as well as NXTG. The tower plays, AMT, CCI, also other big ones out there. Cybersecurity, of course, cybersecurity is going to go along with all of these. The more technology we use, the more we need to protect the data that we have and the programs and stuff. So all cybersecurity plays are going to be pretty big. You can throw cloud software in there as well. And then there's always, of course, from an environmental standpoint, you have more of a clean energy, sort of vibe going on there. That's also going to be a pretty big theme, whether it's solar or water resources, or whether it's carbon credits and stuff like that. So I think a lot of these themes that have been very popular throughout the last year and a half, I don't really see them going away. Now, a lot of these groups and stocks they've logged amazing returns over this time frame, and they are ripe for some corrective action. And but I still think that the theme overall is going to have a lot of funds and a lot of money just kind of pouring into them, and really kind of honing in on their earnings quarter by quarter throughout 2022. Lastly, I'll just add in there too is the whole new concept of this metaverse, which is another thing that I think everyone just kind of has to pay attention to as well.
D, you're always looking for the next hot idea. Obviously, SPACs had a fantastic performance 2021 in terms of providing opportunities. What are some of the things that you're looking ahead to 2022? Obviously, you've been keeping an eye on the pullback in SPACs. So, what are the things that are jumping out, and how are you approaching the year ahead?
Yeah, man, I think I kind of addressed it in my last comment. I maybe jumped ahead a little bit, but yeah, I mean, the SPACs, I mean, there are still literally hundreds of SPACs out there looking for a merger partner. I think there's probably, I don't know, maybe 500 out there right now or more looking for a merger partner. So there's going to be plenty to come from that space. There's tons of volatility there. So I'm going to continue to focus on SPACs until we start to see some more distressed opportunities. I mean, I think that when I look around just all the different groups and I look at the valuations, it is just stunning, the valuations. And I mean, I think that the team has done a good job rotating between names and capturing, the incremental upside and, positioning into pullbacks for a pop. But every day, like I look at Craig's like software valuation tracker, and it's just absolutely stunning the multiples these names are trading at. But yeah, the SPACs are interesting because what's happening is the redemptions have been so high. I mean, you're seeing some SPACs where redemptions are like 99% or 95%. Or people, SPACs have the redemption option. Basically, you can get your money back at basically $10, and up until up until the merger closes, well, during the merger vote, they will send you a notice saying, "Hey, SPAC investor, you own this SPAC, and the vote is coming up, and we want to know if you want to sell your shares back to us for essentially $10." And the deals that have been coming at higher multiples or deals that just don't make sense, people have been completely abandoning those deals. And so what that's forced the SPAC sponsors to lower the valuations of deals. So the more that happens, the more situations where you have really high redemptions, and the pipes are not as big as they used to be. The pipes used to be kind of free money situations, and you're having a much more difficult time for the SPAC sponsor actually raising money in a pipe. So what that leads to is more attractive valuations in deals. And so what will happen is you will have names that price at 10 and eventually go to 50 or 100 or 200 or 300, right? Like, you're trying to find those types of names. You'll have names that price at 10 and go to 5 and then come back and go to 10 or 15 or 20. You'll have some during a market downturn where everything's getting thrown overboard that might go to 2 and eventually come back to 5, 10, 20, 30, right? And so that's one of the reasons I really like this SPAC space. I see a lot of opportunity. Some of the deals are becoming more attractive on a valuation standpoint, and again, it's more kind of a venture capital type of situation. So it might be, you might be out of favor for 6 months or a year, but when you go into favor, maybe a company, it announces a big contract, or they make some type of major technological improvement that really puts them at the forefront of the industry. There's an opportunity to make a lot of money. And also, don't forget about the warrants. With SPACs, there's an opportunity to a SPAC that's out of favor. Maybe it falls to 5 or 6. You might be able to buy those warrants for 40 or 50 cents, and usually the warrants have 5-year optionality, so they're good for 5 years. That warrant that you buy at $4, if the SPAC eventually goes, at 40 cents, if the SPAC eventually goes to $20, that warrant is worth about $8.50. So you really have the opportunity to make 20 times your money on a stock that goes to 20. So that's one of the reasons I really like this space. There's a lot of names out there, a lot of different stories, a lot of different moving parts, and I thrive in environments where you do the research, understand the sentiment, and take advantage of the volatility to really capture gains.
All right, Craig, any thematic investing areas that you're excited about in 2022? You're always at the forefront of, be it edge computing or whatever it might be, but anything that you're excited about for 2022 that you'll be watching closely?
Well, I will remain focused on not only the SPACs like Damon, but the IPO market. I think the pipeline for really high quality businesses is still strong in the IPO market. One space that I'm probably going to start focusing more on, and I have this year, but the fintech space continues to evolve. I mentioned Upstart earlier. I've had a good year in that one, kind of buying when it's out of favor after that first blowout report back in March. And I scaled out of almost all of it. It probably never deserved to be up near 400, but at this point, I'm kind of hoping it kind of does come back even further. It's kind of just fighting the 200-day here over the last week or two. But if these growth stocks remain out of favor, then this thing could continue to consolidate. The further it goes down, the more I like it. I recently started a position in Marqeta, which is MQ. Another very interesting fintech company. that enables a lot of other disruptive software companies to easily kind of incorporate payments and stuff into their business. So as you can see here, it's very much out of favor. Again, probably didn't deserve to be up there near 40 on some hype. I think Citron was out positive on it, which kind of started pumping it there. But the valuation is reasonable. I think it's in the low teens now. I started a position in it, I think, right before all these growth stocks got crushed a week or two ago. Small position. So this is another one where if it continues to pull back into the teens, I will likely continue to accumulate it. There's some. I mean, I really don't like the heavy concentration with Square, but that relationship seems stable, and it really is a play on a lot of these other software companies. They're a supplier to not only buy now, pay later companies like Affirm and Klarna, but there's also crypto applications being built using their technology. The fintech space is very complex and competitive, so you got to be sort of careful. But another one that I used to own that I'm no longer in, but I'm attracted to is DLocal, and this is another one that what I really like about it is the strong growth and healthy margins. Marqeta is still unprofitable, and they kind of have to pay the payment networks like Visa and MasterCard. So it's going to take some time for them to really start making money, where DLocal already has 30-40% EBITDA margins on top of strong growth. I think it's a little under, it's close to 30 times sales now, which obviously doesn't sound great, but it's also something like 100 times EBITDA. Again, not cheap, but if their growth, it's likely to slow, but if it can maintain a high rate of growth, then this is a really interesting stock for the long term. Could be a big winner longer term. So yeah, I mean, I'm just going to keep focusing on those small mid-cap type growth opportunities and new issues, whether it be an IPO or a direct listing or a SPAC. There's tons of opportunity out there. So yeah, I mean, it's more or less the same. I am cognizant of that a lot of these stocks could remain in a favor if inflation does get out of hand and if the Fed gets aggressive raising rates. We'll see how that plays out. The ARK ETFs could be a place where we could hedge or kind of play the momentum back and forth more generally. I know Scott Blue Chip has his theory about new ETFs and how they can sometimes signal a top. Interestingly, the ARK, I don't know if Scott, if you saw this.
Yeah, I'm here.
ARK had a short ETF that
really?
came out with impeccable timing about a month ago. It looks like the first print is 11/9.
What was the ticker?
SARK.
Okay, that's just short ARK.
It's just short ARK.
So they basically bet against themselves.
Well, no, so it's not from ARK.
I was going to say,
okay.
I can't imagine that they put it out themselves.
Gotcha. That is pretty good timing. Yeah.
Yeah. And the other one too, that I'm not trying to call you out, but kind of violated your.
Well, this is mind you, this is a short side of things. I mean, I don't know. This is like an inverse play. That's kind of
so. In Scott's world, I assume, Scott, you would think it's time to buy the ARK then if this.
Yeah, I was going to say the same thing.
Yeah, exactly. Yeah.
But the other one that came out recently, which you mentioned, was Meta, and that was another really great timing, because it was really spurred. The momentum here was kind of spurred by Facebook, kind of explicitly going all in on this whole metaverse theme, which just took all these metaverse stocks up big time. I don't know. When it comes to EVs, I can't help but be more cautious. And for me, it comes back to the valuations. If you look at what Tesla did after their last report, right, broke out over $1 trillion company, and I am, Tesla is what it is. So obviously, everybody's looking for that next Tesla, and both Rivian and Lucid, even Fisker, there's a plethora of EV stocks out there now, right? And I think they've all kind of rode the Tesla wave here, and the valuations really don't make a lot of sense. So I have a small short position in Lucid right now. When it comes to scaling production, I mean that's like the most difficult thing when it comes to EVs. I can, but people can design electric vehicles, but it's scaling the production that's really hard. So some of these companies like Rivian or Lucid that have these enormous valuations with no product or revenue yet, I can't help be cautious on them. So we'll see how it plays out. But obviously the speculative fervor that we've seen this year, these have kind of benefited, and the valuations are sort of hard to justify, in my opinion. So things will definitely be interesting going forward.
All right. Anything else from the traders? Any other questions? Anybody want to throw out anything in terms of strategy questions or anything along those lines? All right,
No,
then.
Gav, sorry, just jump in there.
Sure.
On Trader Audio a lot this week, you and I have been running through a lot of tax loss selling components. So, just to run through a few of those for anybody that's missed us in the afternoons or during the day talking about it. We're looking at names that have been down probably over 40% off their year-to-date highs, or even more, breaking down to fresh 52-week lows that probably a lot of people are holding the bag on, and they're probably just kind of looking to sell out and offset some other gains because the market itself is up over 25 to 27%. So DraftKings was on that list. I believe Palantir, DraftKings is DKNG, Palantir PLNT. Not really the worst looking chart in the world. It's down only about 30%, but it was more into that theme of people had a lot more higher expectations and hopes for it, I think, throughout the year, and they might be willing to throw in the bag below 20, and then maybe look at it again into the new year. What else is on my list, Gavin? I didn't have it right off the top here. What else did we mention? We mentioned a few more of them. Gavin, you help me out?
Yeah, sorry. Let's see. You mentioned Palantir.
I had them written down here a second.
Where is it?
It's interesting about Palantir.
Oh, here they are. I had Roku on my list, but they made a
Craig,
nice pop.
Craig, what are you about to say about Palantir there?
Their margins are actually expected to improve. Their margin profile is better than I actually thought it was. Palantir, I think they came public via direct listing, right? And
Correct.
The CEO, I think, has sold like over $1 billion worth of this stock since the direct listing, which is, I don't know. It's just interesting.
Not the most encouraging. No, Craig, Scott just mentioned Roku. That's a name that you'd recently been buying, right?
Yeah, that's one that I, bought back right around the IPO and kind of sold too early, and I've kind of been in and out of it over the years. I got lucky this week because I bought the day before, 2 days ago, right before those big YouTube.
Well, you must have been listening to our Trader Audio because Gavin and I said everyone's got to be a buyer at the 200 mark. Right, Craig?
Yeah. No,
Yeah.
that was a great call.
No, it was on our tax loss selling list too. It was down 60% off the site 200 level, and we said if you're going to be playing a bounce in this market, there was a plethora of names to be going after, and we highlighted at least for 2 days that Roku alone 200, and we know a couple of subscribers wrote in to thank us for those trades as well. So
a few of the other ones that we had on the list, Scott and Craig. I'm sorry, I'll let you continue on with Roku there.
No, you're fine. I agree. It was way too washed out. I get a lot of these pandemic beneficiaries have just gotten crushed. But this remains a longer term winner, and people aren't going to stop, streaming TV. So I made the fundamental case for it when I bought it yesterday, but you guys were on top of it too, so that's good.
Yes, some of the other names, Scott, that we had on the list: Viacom, ticker symbol VIAC,
Right.
Verizon, Global Payment Networks, Craig, which falls obviously under that fintech area, GPN. Lamb Weston, LW. If you're a fan of McDonald's, you got to be in on this Lamb Weston, which has gotten hit this year. Intel was another name that we had mentioned. Penn Gaming, Craig, I know that's one that you've been involved with.
Yep.
Ross Stores fell in under our list. DraftKings, Palantir, Roku. Somebody asked about Match Group, Craig. I wouldn't view this as a tax loss selling name, though. It's kind of been more of a choppy year for Match Group rather than a steady decline. Would you agree?
Yeah, it's gotten pretty ugly over the last month or two. But yeah, I mean, I still like this one. It's out of favor. I think it's probably an opportunity here.
Yeah, and then I think Zoom was one of that I would say that I keep on the radar. I understand that it was a massive COVID play, but just the percentages, the fact that it's down almost 60% from the summer alone, just kind of sets it up for that, tax loss selling, dropping the fresh year and a half lows. I think ZM is worth keeping on the radar for some sort of bounce play into the first quarter. And then one more, Gavin, and this is kind of a broader look at everything, would be the Chinese stocks. We've been mentioned BABA. I can't find a single person that wants to get involved in any Chinese name. Not only they just absolutely decimated because of all the increased restrictions that are put on them and the headline news of being pulled from the exchanges. I mean, if you're looking for a short term, again, this is not what I would call a lottery ticket. I wouldn't even bother putting too much money into it. But if you're looking for really going against the crowd, I think maybe looking at a Chinese stock or two might be okay for the short term. I don't know
Damon,
if you disagree with that or not, but
no, I'd agree with that. Damon, you're always looking at distressed assets. Was there any that might fall into tax loss selling on your radar? Is he still with us? Damon? Yeah, on mute.
Oh, sorry, I was on
No
mute.
problem.
Yeah, there's really not a lot of distressed out there. Everything's overvalued. So, like, this first time in over a decade where I literally have seen nothing distressed. So there's some distressed SPACs, but that's about it.
All right. Okay, we're running on about an hour and 15 here, so I think we are going to wrap up this trader strategy meeting. A lot of good input from the team. As just a quick recap, we took a look at the last couple of weeks of price action there and what opportunities are opening up for the different traders on their screens, the areas that they follow. We also took a look at what we're expecting over the next couple of weeks and some of the early trading action that traders are watching. Certainly keeping an eye out on that Fed meeting next week. I think that kind of sums up the idea that we could be in a little bit of a tighter, choppier trading range until we get that headline risk out of the way. We will also have options expiration, of course, a couple of days after. So that should set up an interesting week next week. That leads us into the potential for a Santa Claus rally. And then we also took a look at some of the early themes that we're looking at for 2022. So hopefully that will get all the subs on board for what they should be looking for. Commentary that could be emanating from our trading desk here and some of the plays that we'll be looking at and getting involved in. So if there's any parting shots from anybody, let me know now. Anybody got anything else to add before we go? All right, then I think that should do it for us on our end. We have taped this, hopefully. Anyway, we'll see. But I will be posting it to the site for anybody that wants to recap anything. If there's any additional questions on any of the topics discussed here today, please feel free to write into the Talk to Us button, and we'll be happy to answer them as they come in. Gentlemen, as per usual, thanks very much for jumping on audio here, joining us, and providing some of your insight. I know it's always of value to the subs and to my own trading, so I appreciate it on my end over here. And everyone out there, have a great day.
You too, Gav.
Thanks,
Thanks,
Gav.
Gav.
All right, talk to you soon.
Bye.